Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first scenario where we are looking for a zigzag to the downside in a wave A, B and a wave C, after which we then expect continuation to the upside. In wave A, we are then looking for a leading diagonal, a 5-wave structure, 1, 2, 3, 4 and then eventually a wave 5, where we are waiting for this wave 5 to finish. It is common for a wave 5 to break the 1-3 trend line, so it's no problem to move to the downside below the trend line as long as this move to the downside is not going to hit 62.2k, because that would invalidate a wave 5 and therefore also invalidate a leading diagonal, as wave 5 in a leading diagonal is not allowed to be longer than wave 3. So the 1-to-1 that you see on my chart here is a trend-based fib extension taken from the start to the end of 3 to the end of wave 4, comparing 3 with 5. To the downside, we do have interesting support to potentially end that wave 5 and therefore wave A to look for a rally towards the upside. It is the area between 63.5k and 62.9k. What is also important is the volume. Price here is making lower lows, but you can also see that now we've been making lower lows on a declining amount of volume, which increases the probabilities to look for a bit of a relief rally soon. If we then move to the upside in this scenario, we are then looking for a wave B, a corrective structure to the upside, where the target is between the 382 and the 886 that you take from the high to wherever the low is going to be. Of course, it is quite a big area, so it is important to look for some additional areas of resistance, and we have a blue box here, 66.6k to 67.1k, and then another one here, 69.1k to 69.7k, then the double top at 70.1k as well, and a small blue box here, 70.8 to 71k. After wave B, we are then looking for a wave C to the downside, after which we then aim for price to continue its way towards the upside. The second scenario is a flat structure where we have a 3-wave A, a 3-wave B, and then the same diagonal to the downside in a wave C. The common target for your wave C is between the 1.236 and the 1.618 trend-based fib extension, taken from the high to the low of A to the high of your wave B, giving you a target between 64.9k and 62.7k. Also here, you don't want to hit 62.2k, as that would invalidate a diagonal to the downside. On the lower time frame, price made a low and started to range sideways, and you can see that price multiple times hit the 886 Fibonacci, taken from the low to the high here, which increases the probabilities for price to take out this low sooner or later, which now happened during the recording here as well. Now, the more bullish scenario in this move towards the downside is that we have a potential 1, 2, 3, 4, 5-wave structure where we can look for a flat here, where this is going to be a swing failure pattern. Price moves back inside the range and we look for a bit of a move towards the upside in a wave A, B, C, after which we then preferably still want to see a move to the downside in a bigger wave A, B, and a wave C. Of course, continuation is still an option for a wave WXY, where we then look for over here a WX and a 3-wave Y, immediately moving to the downside towards that interesting support area between 63.5k and 63k, where we can then observe the reaction locally and look for signs of strength. With regards to CVD divergences, we actually had a lot of CVD divergences today. On the 15-minute time frame earlier today, we had bullish CVDs here, but as explained and shown in the live stream, we had consistent bearish CVD divergences as price was moving to the downside on the 3-minute time frame, which you can see over here. Lower highs on price, higher highs on the CVD, continuous bearish CVD divergence with every bounce that we got. And also locally over here, yes, we had some bullish CVD divergences, but then they were countered again once more by bearish CVD divergences, which have now played out. So if we then look at the probabilities of the different scenarios, then on the 1 hour time frame, when we look at this move towards the downside, we have a structure with a lot of overlap, and the volume is moving down as well, as price at the moment is making lower lows. Therefore, the probabilities do increase to look for a bit of a bounce to the upside soon. However, on the 15-minute time frame over here, we were still looking for price to take the lows because we touched the 886 as price started to range, and therefore the probabilities are higher to still move down. And we are close to a solid area of support as well between 63.5k and 62k, which is definitely my next area of interest, where I'm interested to observe the reaction, look for signs of strength, and if we do see signs of strength, I'm of course interested to participate in a potential move towards the upside. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Wave Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.